I wonder whether housing and shelter costs could be the Achilles heel of bringing down inflation, because if you look at what's happening with rents, if you look at what's happening with the supply-demand imbalance, there just isn't any inventory right now because of so many people being locked into low rates. 2/3 of mortgages are below 4%. No one in the right mind wants to sell their house and trade at 3% for a 7% mortgage. That has brought prices up July over last year. So why do you think that even if we look backward a little bit and it starts to catch up, as Powell said, that inflation from shelter is not going to be an issue?
Well, we get a lot of data on rents from people like Zillow, which leads the CPI measures by anything up to a year. So
right.
I can tell you with a fair degree of confidence, between now and the middle of next year, the rate of rent increases is only going to go down. Now, after that, I mean, who knows? It could go back up again. But I would be surprised, because as inflation overall comes down and Treasury yields come down over the course of the next year, mortgage rates are going to come down as well. And what that will do is release some of that supply, because you hit the nail on the head there. Lots of people are locked into these super low rate mortgages, so they refied during the pandemic. And so they're kind of trapped, because nobody wants to trade a 4% mortgage for a 7.3 mortgage. But those rates are going to come down. I think we're probably at the peak now for mortgage rates for new borrowers. Over the next year, they come down a lot. That reduces that gap, allows people to start moving again. And critically, that means that we get more supply as well as more demand. This has been a very strange housing market over the last couple of years, because there's been a huge drop in volumes. The number of transactions has absolutely plummeted in the existing home market. Prices haven't fallen. And the reason they haven't fallen, as you said, is that nobody wants to sell. So demand and supply have come down together. And this never happened before. I mean, normally if home sales drop by 30%, you can be sure that prices will fall.
Yeah,
but
and that's what I really wonder. Yeah. I wonder whether the Fed really understood what it was doing. And, normally housing as a transmission mechanism for higher rates, you would think, okay, simple math tells you mortgage rates go up, prices come down. And that didn't happen right now, because, as you say, so many people are locked into low rates. There was no supply. In Joe's neighborhood of New Jersey, house goes on the market. There's 10 bidders that day. It sells for 10% above asking price. And because there is no supply, people are pouring into the rental market. Manhattan rents hit an all-time high in July, probably again in August. Do you think the Fed or anyone really foresaw this? And what makes you think that mortgage rates are going to start coming down, because we're not looking until next June for any kind of interest rate cut?
Yeah, well, you're right. Nobody saw this coming. This has been a housing market which we've never seen before. I mean, like I said, when volumes drop by 30, 40%, your immediate reaction is to say, OK, prices are going to fall. But they didn't. So nobody saw that coming. Nobody saw the extreme weirdness in the rental market that we've had over the last couple of years, triggered initially by the pandemic. But the echoes of that are still rumbling through the market. But I'm pretty convinced that inflation more generally is going to come down faster than the Fed thinks and faster than the market thinks. And what that does is bring down 10-year and longer Treasury yields, which is what drives mortgage rates. So even if the Fed holds, as they claim they're going to hold through the whole of next year, well, we'll see if that lasts. But even if they do, the longer end, which is what matters for the housing market, is going to come down. The curve will likely invert substantially further if the Fed doesn't move. And the mortgage rate reduction is what's going to trigger finally freeing up some of this supply and bringing supply and demand back into some sort of balance. It'll take a very long time. But I think you've got to remember here that the home prices are still ridiculously elevated. Prices in relation to incomes are at the peaks that we saw in 2005 and the peaks that we saw in the 70s. So there has to be some mechanism to correct them sooner or later. And perversely, I think it's going to be when rates come down rather than, as we saw, when rates went up.
We've been hearing that since last spring.
It's very different.
Yeah. All right. Yeah. Ian Shepherdson, thank you so much.